Financial markets around the world have taken a beating for a second day as investors fear Donald Trump's trade tariffs could trigger a global recession. New York's Dow Jones share index plunged 5.5% on Friday, more than 2,000 points, as Wall Street posted its steepest losses since the pandemic. European and Asian shares also tumbled. Right, let's bring in Akin Oyedele. He's a deputy editor at Business Insider. Akin, good to see you. Part of your job is looking at investments. Part of that is knowing where the bottom of the market is. Are we there yet?
That's the trillion-dollar question. And it's hard to say, but it looks like we aren't, judging by the mood on Wall Street this week. What we saw today, especially with the market down about 5%, was, what some would describe as indiscriminate selling. People essentially just taking as much money off the table as they can in anticipation of further price declines. So, it's always hard to time the market or to call a bottom, but just judging by what we saw this week, I wouldn't be surprised if we, woke up Monday morning and there was even more selling. So it's hard to say, but the moods, the vibes are definitely very bearish right now.
Part of Trump's gamble, in basic terms, relied on other countries not hitting back, and then they did. How much is China's announcement of reciprocal tariffs driving this sell-off, and could it get worse?
So China's announcement today arguably was the big driver, in addition to some comments from the Fed chair. But the announcement definitely, I would say, was a big market mover, because what we saw on Wednesday from Trump was a tariff announcement that was, that announced tariffs much bigger than anyone had anticipated. And so now we're seeing a response from China and potentially from others down the road that will be larger than what they had been planning to do. We know that Beijing is hitting sectors of the US economy that are politically sensitive for Trump. So things like agriculture and industrial goods and rare earth restrictions, or rare earth materials, rather. So they're hitting where it hurts, but they're also hitting hard. And, China does have leverage in this game. Their exports to the US outpace the US's exports by a factor of about 3 to 1. So that's part of the scare here, is that, we have the two biggest economies essentially trying to stretch the rubber band as far as they can before it snaps. And they both have really deep, really strong economies that can withstand some shock for a while. And so most definitely China's snapback is part of what's rattling markets. Could it get worse? Potentially. Not just because China could escalate this or the US could escalate this, but we, could see a response from Europe, for example, and from some other key trading partners of the US that decide to hit back either over the weekend or next week as this continues to unfold. So it could definitely get worse.
Akin, this is wiping trillions of dollars off the value of US companies. The market, I guess, speaking pretty loudly as to what analysts think of Trump's move. What about the uber wealthy who have serious wealth tied to the value of these companies? Is there any sign of nerves from any of the big names with really big-time wealth at stake here?
Well, I mean, I imagine that privately they are very concerned at what we're seeing, because this is, at least from a political standpoint, this is unprecedented. We haven't seen anything quite like this before. But I would say much of the nervous commentary has actually been coming from, if we sort of divide corporate America into the big players and the small players, like small businesses and smaller sort of mom and pop type people have been a lot more vocal about the damage that this is going to do. Next week and onwards will be interesting, because we start corporate earnings season here in the US, when a lot of companies start to report their results. And that's when you get commentary from, for example, the bank CEOs and a lot of other executives. And so, they're of course going to have to address this elephant in the room. And so I think from next week, we'll start to hear from that class of people. So far, they haven't been as vocal, but I think especially once earnings start to roll in and they are talking to analysts and investors, we'll start to hear a lot more about what they're thinking and feeling about the moment. But one of the concerns as well is that you could see wealthy people start to pull back some of their spending because of the market sell-off. The idea being that, sort of wealth effect. They don't feel as wealthy as they used to, and so they may start to pull back spending, and that may have implications for the economy. So that's part of the concern here. But next week and onwards, once corporate earnings kick off in full gear, we'll start to hear a lot more from the ultra wealthy class and executives.
Akin Oyedele, Deputy Editor at Business Insider. Thanks so much.
Thanks for having me.